joining me right here in the studio. It's great to have you. Good morning.
Good to be here, Laddie. Thank you for having me.
What a run.
Yes.
It's almost like breakneck speed, you know, when you're looking at the NGX insurance index. And I guess at this point, is it just the reforms, the Nigeria Insurance Industry Reform Act? Is that the only thing driving this index, or there's more that we don't see?
So, I mean, I think there's more that it has started earlier than now, but we just didn't see it. So if you take your mind back 2014, look at the numbers that came out from the sector. In terms of gross premium rating, that went up 71%. And for the first time in history, the industry or that sector pretty much grossed 1.1 trillion in gross premium written. That's significant for a sector or an industry that over the last 10 to 15 years, you know, I mean, the numbers have been quite appalling. And this, if you situate this in the context that there's still many challenges facing the sector. If you look at it from an insurance penetration level, people talk about this a lot. Nigeria, compare it to the rest of Africa and some of the MENA countries in the MENA group, you see that penetration for Nigeria is still significantly low. Way below a percent.
Below 1%.
Below 1%. So if you situate that and then think about it with the cultural beliefs and our cultural system that says people really cannot patronize or don't like to patronize insurance because of a system of belief, you then ask why, what's driving these numbers? So you then come back to macro variables. You agree with me that inflation has been quite aggressive over the last 2-3 years. FX also has been quite aggressive. We've seen the Naira, I mean, we don't want to use those words, depreciate and all of that. I mean,
we're
the
seeing
Naira,
weakness,
yes,
but there's also stability, which is fun.
But then all of that has sort of been priced into those numbers we're seeing, and then suddenly the sector is churning out very huge numbers. If you look at their margins also is quite resilient. I mean, margins both on a profitability basis, return on average equity, return on asset. These are quite staggering. Return on asset touching about 50%, return on average equity about 30%. These are quite attractive ratios. However, I still feel there's still a lot to be done. Now, coming back to the reform, which is the biggest catalyst we're seeing right now, clearly the NICOM clearly has come up to say, oh, presidential assent, which we just got a couple of weeks ago, right? With looking at recapitalizing the sector, minimum 5-fold. So if you look at it across business segments, if you look at life, for instance, it used to be 2 billion, now it's jumping to 10 billion. For non-life, that used to be about 3 billion. That's going as high as 15 billion in terms of capitalization. And that goes all the way to composite insurance, which used to be about 5, and now is expected recapitalization of that is going to be 25 billion. And then for reinsurance, which used to be about 15, they're expected to have about 35 billion in share capitalization. Now, what this means is that we should be looking forward to some upward repricing in share prices, because these insurers have to come to market to raise capital. They want to raise this capital at some very decent valuation, right, such that they can attract as much funds as possible to meet up the capital requirement. Again, you want to ask yourself, in the industry, as of today, which of those players is currently meeting the capitalization or currently has a gap? So you have a couple of names. I mean, we run these numbers every now and then. About 5 names clearly already hit the capitalization mark.
That's for the insurance industry.
For the insurance sector, right? I don't know. Can I call names?
Let's hear them.
I mean, we have name. I think we should have Mansard on that list. No, did I say 5? 4 of them.
4.
2 more, which is not coming to my brain right now. So clearly that means about 90% of the players in the industry has to raise fresh capital. What does that translate to in terms of funding capacity that is needed? That's roughly 600 billion to a trillion naira of additional funding required to adequately capitalize that sector. Now, the next question is, in the context where we see the banks looking to raise about 4.5 trillion naira, does that create additional capital squeeze or liquidity squeeze in the market? The government itself is talking about raising maybe about
everybody's trying to raise
8.5 trillion naira to bridge budget gaps. So does that create additional liquidity strain? I don't think so. I think we have the big players within that space who are the OGs in the sector. They clearly would have the right mechanism, have the right structure to attract these funds, and that's part of what we're seeing. Investors repricing this sector based on this capitalization reform.
Right. You know, it's quite interesting because I was looking at you know, most of your recommendations. I think I saw the one in July.
Yep.
And under the insurance sector,
segment,
I saw it was mostly buy for all of those, you know, assets there.
Yes.
But I think that has changed. You
Yes.
know, a few are on, you have to reduce, you know, some you might want to sell, you know, at this point. But, you know, with this momentum we're seeing so far, normally we've been used to 9% closes for the index. That's last week. It's mostly 9%. Started the week, I think, 9%, about 9 point something. But yesterday was 7 point something. Is it fizzling out gradually?
Well, you know, there are two sides to it. There's the market. The market itself, you have those who are trading. They're looking for opportunity to bargain on and quickly take profit. So you can't discount that out of the market. People, I mean, if I were positioned in the market and I've seen 100% on the stock, I mean, no brainer.
Because consolidated Hallmark Insurance, that's done about 70%.
Yes, no brainer. In a few weeks, no brainer. I want to take the profit, right? Yeah, take the profit. There might be a bit of pullback, and then I can come back into the market. So the traditional trading cyclicality or the psychology that comes with trading in the market, yes, all of that will happen. But that does not take away from the real story, which is that the sector is currently going through a reform which seeks to adequately capitalize it such that it's able to compete more aggressively, globally, even leveraging after, right, to churn out products that can sell across Africa, digitize the sector more adequately, and more importantly, pursue penetration or drive further penetration in Nigeria. So these are the big story for the sector, which I think would get to see how this evolves.
I'm looking at the rally so far. Is it early to still enter the insurance stocks at this point, or is it getting late, in your opinion?
So you want to do a very, so let me just talk on a very broad, high-level basis. It's not early, it's not late, right? If you're reading the markets prior to now, you're positioned, you're seeing some gains, you want to take some off the table. It's not saying that, oh, everything is going down. It's just being, I mean, you call it part of risk management when you talk about portfolio and investing. You're coming in as a new entrant. You want to be clear with your objective. Why are you coming in? Are you buying into the long story, or you're just trying to play the short story? I think it's always advisable to buy the long story, buy the market for the long haul. For the short story, you can also still come in. However, you got to keep one of your eyes open because prices could retrace steps at any point. Right.
And, you know, at this point, we're seeing, I guess we can call it reforms-driven rally at this point. So which sector is next? What reform are we expecting now?
I mean,
that could, you know, rally maybe consumer goods, or, you know, what's next at this point?
I mean, you want to look at it from sectors that has some sort of regulator behind it to provide some sort of sanity, so which most times you find within the financial services sector, because of course this is finance. We're talking money, people's money. Which is the ordinary investor with their small 1,000, 5,000, 10,000 2000, they are the ones that need the most protection because they are the most vulnerable. So because of that, you have regulators all the way from the Securities Exchange Commission that oversee activities within the pension industry. You have the PENCOM. For insurance, you have NICOM. For the banks, you have the Central Bank of Nigeria. So sectors where you find that there are structure sitting there with a regulator, having regulatory oversight, then you can anticipate continued reviews in pursuit of advancing progress and enhancement of deeper, broader development for the sector.
Oh, we have regulators in oil and gas.
Well, for oil and gas, I mean, yes, indeed, we do, but I think we've seen some reform already. The PIA is there, everybody's talking about it. How aggressively is it being implemented? Well, yeah.
There's still the implementation issue, right?
Exactly. So, and then you have some other external factors, or crude oil price, crude oil production, OPEC somewhere in the corner, US somewhere in another corner with their oil shale production. So a lot of dynamics can come into that space to shape things up. But for the other sectors that has maybe a fewer variables that could sort of tilt or affect, mostly within the financial services sector. For consumer goods, you think more broadly about macro. Macro environment will shape up how the sector.
So I guess if inflation dramatically drops, that's good for consumer goods.
Yep. Foreign exchange, more importantly, appreciates a lot further. Then maybe, for instance, there might be smaller subsector teams. For instance, there's some aggressive push from federal government, maybe through the Ministry of Agriculture or something, to pursue some backward integration program that can enhance cost efficiency within this consumer space. You could have a bit of all of that. Are we tilting towards, are there policies to drive us towards self-sufficiency within specific sub-segments in the sector? Even logistics, for instance, is another big sector which nobody really is talking about. Do we have sufficient reforms, policies for that space? I don't think so. So there's still quite some work to be done to, lift things up for
and definitely, I guess at this point we keep it a close eye on most of these reforms coming up. But we've seen this rally, for the NGX, still, at all-time high levels, and I'm sure there's still expectation for more highs, in 2025. But how does all of this, spill into Nigeria's economy? Because they said, the capital market is the barometer.
Oh, yes, indeed. It is a barometer. And it works. It's a two-edged sword, sort of, right? So we've seen very deliberate, concerted efforts from the fiscal side and monetary side in terms of policy, communication. And all of this is helping capital market to shape up. And more importantly, if you look into the capital market itself, the composition of foreign participation, local participation, is still tilted towards local participation. And local participation, that's local money.
Right.
It has nowhere to run to. We've seen what's happening in the yield markets or the fixed income market, where yields are contracting with some speed behind it. Now, what that means is that some of these monies that comfortably play within the fixed income space would naturally gravitate towards equity in search of better returns, or somewhat you call it risk-adjusted returns, So we expect to see more of that. So for me, the capital market currently, I'll say, is living the life. It's living the life, and I expect this could linger for quite a while. I know there's been sentiment that, isn't this bull run too fast? Isn't it too aggressive? Isn't it going too, but then the market has been held down for quite a long while. We've had many years. The last 10 years has been quite devastating for the economy, for the capital market itself. Even though few years within those years, you will see some double-digit sort of returns,
right.
And then subsequent years it contracts again. But I mean, I feel this is a period where looking at the policy, we've seen the numbers, we're seeing our half-year report, we call it statistical gains, social strains.
Right.
Because statistically, we think a lot of gymnastics is being done. Look at what was done with GDP rebasing, the inflation rebasing, and all of that should translate to more attractive or meaningful numbers. Does that translate to improvement in social lives? Maybe.
That's another story.
That's another story.
Fantastic. It was great having this conversation with you. Thank you so much for coming in today, Mr. Abiodun Kerikwe, MD, AfriInvest Research and Consulting. We'll keep tracking his market if it goes up forever at this point. Well, thank you so much.
Thank you for having me.